Hi, this is Mark from Right Line Trading. I want to start quickly by reading this disclaimer that all signals and trading opportunities provided orally, written, or electronically that are disclosed to visitors or subscribers for educational demonstration purposes only. The company doesn't take responsibility for profits or losses that may be incurred by traders. Everyone should know that trading involves substantial risk, and it should be understood that a person can lose a significant amount of money. Never trade what you cannot afford to lose. Always carefully consider your financial position prior to trading. And those of us here at Right Line are not registered financial advisors nor licensed commodity trading advisors. Now, there are many of you who want to know, how can I foresee an explosive stock move before it happens? And I'm going to show you here exactly how you can. There are certain requirements that have to be present on the chart, but if you've got them, you're going to be able to see these moves occur, get in the trade before the move takes off. Now let's take a look here. This is a GameStop, and I'm going to show you more than one example. And what we have here, this is our Laguerre oscillator, which we have modified internally, and it goes from oversold to overbought. Now, during this period of time, price is simply moving in a channel. So while the gear is showing that there's a significant increase in buying pressure, you simply have price moving sideways. How could this be happening on sideways moving price? Well, what's happening is that the close of the candle is approaching the high of the candle. That's momentum. As you have increased buying power, the close is going to approach the high sequentially from candle to candle to candle to candle. Eventually, if the 50 is heading up, our 15 exponential is heading up, and we have a sequential increase in a different momentum assessment and a sequential decrease in chop, you're going to get this explosive move up. Now you're in this trade right here. And maximum excursion on this trade is $62.82. So this is a $62 explosion in the direction of the multi-time frame trend with our 50 and 15 up, and we know that chop is sequentially decreasing, momentum increasing, and our Laguerre momentum, which is our second assessment of momentum, oversold to overbought explosion. Now here's a chart of Tilray, and you can see we've got some software generated signals. Here's a short signal. We cannot take a short trade when price is above the 50. The long generated signal, up you go for, this is just 61 cents. Not a bad move. Cannot take these short signals. Here is a prompt to enter long. You could have entered long right here. Now this is a very big move. Let's see just how much this is again. This is about a 4.36% move. It's a $1.13 move on Tilray at $26. here is the identical signal that we saw last time. Again, bias is green, multi-time frame assessment and trend, 50 is green, 15 is green, right here, 15 exponential, and here we've got a roll long on decreasing chop, increasing momentum. Here's the Laguerre, goes from oversold to overbought, and the market goes into a period of long consolidation. During this whole time, the Laguerre is locked at 100, telling us that there's increasing buying pressure present in the market, and that we're going to see an explosion to the upside. Now, we could have taken this system-generated entry. It's a valid one. It's a long trade above the 50, with the 50 and the 15 green, and the roll of the C2 is with us. But if we're for any reason hesitant to take a system-generated signal, all we needed to do was to see this. Now, I call this oscillator price divergence, and it occurs over and over again on multiple stocks throughout the course of the day. We're in the process of automating this signal. So in our Laguerre, go from overbought to oversold, oversold to overbought, and prices in consolidation. The likelihood of an explosion out of consolidation is exceedingly high. This is a great way that our indicator system leads price, lets you know when a likely significant move up is going to occur in the market. And that's exactly what we need in order to trade. Now here, these are irrelevant signals. None of them can be taken. Obviously, I can't go into detail as to why. But you cannot go short above the 50. And right here, there is no long setups on these signals. There's no way to go long. Look down here. This is all red. So everything here is censored. And none of these system-generated entries can be taken. These signals need to be vetted. This signal, perfect. You can go long here, or you can take what we call our oscillator price divergence signal. We're going to be creating a channel here and generating an entry on a break of consolidation. So this is a terrific way to read market structure. It is not an analysis of Japanese candlestick patterns, which absolutely have no relevancy in today's market. Today's market is governed by the direction of institutional money, and Japanese candlestick patterns only trace out the sentiment of small retail traders, not the sentiment of big institutional traders. They just zap the market in the direction they want to go. If you're using Japanese candlestick patterns to trade right now, it's very unlikely they're helping you achieve your goals. So this is Mark. I hope you have a great evening, and I look forward to talking with you tomorrow evening.